Okay, we're going to move on to objective 2, which is prepare personal balance sheet. So let's take a look at what is on the balance sheet. All right, so the balance sheet is going to tell you where you are. So this balance sheet has these subtitles, but on the left side, it is all your total assets, okay? So assets are items that you own, like cash, any savings accounts, any real estate that you have, mutual funds, any property that you have, like jewelry, your automobile, your home, your residence, all those things, if you have stocks or bonds. Then over here is your liabilities and your net worth. So your liabilities are items that you owe, such as rent, utilities, taxes. And so you're going to total your current liabilities. And then if you take your total liabilities, and you want it to, your balance sheet is going to balance. So whatever you get for liabilities, you have to add your net worth to get it to balance to the total assets. So total assets always equal your total liabilities and your net worth. All right, so what are your major headings for your balance sheet? This is kind of what we were just looking at. You have your assets. So your total liquid assets, assets that can be easily converted into cash. Then you have any investments that you have made. We just looked at that. Investments would be stocks, bonds, CDs, mutual funds, any investments in other real estate or retirement funds. Okay, and then you have your total real property, your total personal property. So all the things you own, when you add all that together, that is going to be your total assets. Then you have your liabilities. Current liabilities are the liabilities that are coming due in a short period of time. So if you go back and look at your current liabilities here, this would be your utilities, rent, any insurance premiums, taxes. Let's see what else. It's hard to look. Travel and entertainment card balances, a bank line of credit balances. Those would be all your total current liabilities. Then you have your long-term liabilities. So if you look at those, you have, let's say you own a home. So that's going to be your primary residence mortgage. And then you have your auto loans. Okay, so they're going to be longer than a year. Things that you're going to pay over a period of time. Those would be long term. Okay, and then you have your net worth. Okay, so if you take your total assets and subtract your total liabilities, that will give you your net worth. What you own minus what you owe will give you your net worth. So assets, they're going to be at the fair market value of what you own. Your liabilities, these are your current and your long-term. Current is going to be what you owe within a year, but long-term is more than a year. Okay, but both of these are items that you owe on, but we're going to categorize them as current or long-term. Your net worth, like I said, is assets minus liabilities equal your net worth. What is fair market value? That is what you could sell an asset for right now and how much you would get for that particular asset. So that can change. Okay. If your assets, what you owe is more than, if your assets, what you own is more than what you owe, then you're going to have a positive net worth. Okay. So you're solvent. Okay, but if you owe more than you own, so if your liabilities are more than your assets, your net worth would be negative. Okay, and this is an exhibit, and you can see the net worth. If you're younger than 35, you're not going to own a lot. You're probably not going to owe a lot. So you can see as you get older, your net worth or the median net worth increases until you get about 75 and older. So there is hope for you if you're in this category here. All right, I think that is all for this objective. And so in the next objective, we're going to look at income and expense statements.